Good evening and welcome to the Trading the Tech Show. My name is Derek with iLi Academy, and today is Monday, November 2nd. It is the eve of the US election day, and right now I think it's pretty much the final day for people to be unsure of what's going on or what the outcome will be. I think by this time tomorrow, we probably will have a more clear answer on what the direction of the country will be. And I think that's a good thing because I think markets will be able to settle down a little bit and can have some real direction going forward. People can start making plans for what they think is next, and we can start to kind of go forward. Now, today was a really, really good day for the Dow. I don't know if it's really, really good. Maybe back in the past, this was a stellar day, but we're up, I think, about 430 points or so on the Dow today. That's kind of where we ended up. We ended up at about 26,956 today, which is what we needed to kind of recover from last week's uh, pretty much beating that we got in the market for most of last week. That has helped us, get some volatility in the market because we had that push down, and now today we started with a great, had a great start to the week. So we'll see what comes about tomorrow. Right now, the futures sit at about 164 to the positive side. So that could change, of course, before tomorrow. But anytime it gets past 100 either way is when I start to feel like, okay, traders are serious, or this might be the direction that we're going to go in. So tomorrow would be a great day to continue what we had today. Definitely will help some of our positions that we have in our auto traders as well. It should, because the market is kind of correlated to that as well. So hopefully we will see, good turnout tomorrow for the election. I think so far we've got some places, some states even, where the pre-voting has eclipsed the voting that occurred in 2016. So that means that more people are engaged, more people have a dog in the fight, more people are making decisions and trying to make their vote count. And I think that's a good thing going forward. I think this whole process has made more people aware of politics in America, and aware of the decisions that are being made. I think people are kind of tuned in. I also think people are just tired at this point. They've gotten, beaten on so much for the last four years. Just being for one side or another. Some people have definitely just kind of left it mentally, just kind of let go because it's been so much. So maybe with the election coming, maybe we can kind of settle in a little bit. And especially as traders too, I think this whole time has been good for us as traders because it's given us time to think about our strategies, to kind of think about what our futures are going to be, think about what life is like without an actual job that we would go to every single day, or think about what it's like to actually work at home. I think a lot of people, I know in the past that it was very kind of taboo to even suggest that you would work at home. So you didn't have very many friends and people who were able to get up from their bedroom and go into their living room or their office and work. We didn't have that. But now, in just the space of a few months, we've actually changed the perspective on that from even from a corporate standpoint. So whereas before the excuse always was that, oh, well, we don't know that we can have security for the computers, and we need everybody in one place. It was just kind of like an old mentality. I guess they didn't realize that the technology was there for people to actually work from home. So I think companies now are realizing like, oh, wow, we save money by not having all of this extra office space. Maybe we really just need to work together, in the same place, maybe meet together, maybe once every couple of weeks or something. maybe that's all we need. And then people can work from home. They'd actually be reliable, still be productive and efficient from home. And it would cut down on the commute, so it helps the climate. It helps, the emissions that we're putting in the climate because people are not sitting in their cars in traffic. It actually reduces traffic too. So, when you need to go somewhere, it's not so congested. And I think it's actually been an eye-opening situation that's going to change our lives going forward forever. I don't think we're ever going to go back to that time where we think that working from home is a bad thing. So as the disease progresses or this virus progresses, and we still don't know the full extent of what's gonna happen. I think that we're just probably in the very beginning of it. Even though we're ready for it to disappear, it's definitely not. So I think we're just kind of in the beginning of a cycle where we see flare-ups of the disease or the virus, and we're gonna have pockets of people who will need to continue to work from home. So I think on a corporate level, at least, I think there's going to be a lot of that going forward. I think the companies are probably going to look at it and go, okay, where can we slash money from our bottom line? Where can we slash expenses? And one of those things is probably going to be office space, because they're going to realize they're going to probably start pouring money into systems where people can actually work from home. And then you're not limited even to your candidates too. So you might have candidates that can live further out. You might have candidates that might be able to live across the country. You might have a whole team where you can assemble the best people, but everybody doesn't live just in within the proximity of the office. So you might be able to find candidates that you and hire candidates that normally you wouldn't be for. So I think this has actually been a good thing. So we can look at it and say, oh, it's a bad thing. It destroyed the economy. It really put us on our back for a little bit. A lot of people are out of work, but maybe this is the catalyst that's going to push us to change our mindset about how work is done and the efficiency of work and whether or not people can actually be trusted even just work from home. I think it's changing. And I think that it's a good thing. Now, as far as traders, I think it helped us too, because it helped a lot of people realize, like, I need something different. I need something more than just my 9 to 5 job. I need to have a different income source because I don't want to be in a situation where I'm sitting and the money's not coming in. And I feel helpless and I'm waiting on the government to get their act together and pay me. Those government system. I mean, I think in Florida, people were waiting months for just unemployment. They couldn't get in maybe it works for a certain number of people, or maybe the systems were built to handle a certain number of people or the traffic that's coming in. But when everybody's coming at the same time, obviously the system doesn't work. People spending all day on hold, just hearing the hold music, and not ever speaking to anybody, and doing that for days and days and days and days on end. And just not having enough people working. Then of course, they're battling too, because now they have to probably have people working from home and that type of thing too. So no telling what type of systems issues they were having and the reasons why they were not efficient. So I think companies are going to start looking at how can we be efficient. Traders and individuals who may not have even considered trading from home before, now they're considering it. They're looking at it. They're seeing it on YouTube. They're seeing a lot of people touting, trading from home. And so now it's good for our business. I think it's great because people want to make money and they want to do it in a more efficient manner. They want it to do it in a way that's not affected by all of these other things. Because you think about it, even through all this time with COVID or whatever, I was comfortable being able to be at home, because I know that I have something else. I have other ventures and things. I can do things through the internet. I don't need to actually be just face to face. So it definitely helps you to kind of come up with different ideas. So I think it just made us think differently. And as traders, we're searching information. We're searching out information. So it's one reason why I can be here today. I have to give it to COVID because I wasn't really on this track before. I was doing some other things, and those businesses still are growing, and they kind of got hurt a little bit by COVID, but we kind of found a way to continue to kind of grow it. And even though those things got hurt a little bit, they're still now they're coming back online, and now I have something extra which I probably wouldn't have had if COVID wasn't here. I don't think I would have started this at this time. This has always been my goal. My goal is to have my prop firm and all that here in Brazil. It's just I wasn't thinking about it at this particular time, thinking that I could do it at this particular time just because of my other endeavors. But it opened up the time for me to think about it and put it together. And when I started looking at it, it's like, okay, here's the opportunity that we have, and the tools that I've been developing and the things that I have in, just I've been collecting over time as I've been kind of building towards my idea. Now all of a sudden everything is here. So it presented the opportunity. So the point is just to be ready. I think it's better to be ready than to get to a place where you needed to be ready and now you're scrambling to find all the pieces. So whatever it is that you're doing, especially your trading, you want to start putting in your time and working towards it, and learning strategy. And so when you get into this situation, you don't panic. It's a good thing. So this obviously is the Trading the Tech show. So we're going to come out of the commentary a little bit now, and we're going to step into our charts and take a look at what the opportunities were today and what opportunities are presenting themselves or developing at the moment. So I'm here on this US dollar CAD. So maybe we'll start here today. On the US dollar CAD, we see a big change in direction. We had this nice trend that was developing here, but we didn't really get to push past these highs. These highs here. We have the high watermark for our resistance point was right around this 133.69, 133.70s area. We had some wicks past that, but most of the bodies were pretty much in that 133.73 area as a top. And then we've traded away from that. Now this is dollar based, and it's dollar major. So we are actually pushing down again. So this is an expectation. I didn't expect us to move up and continue in a trend long term to the upside. I'm expecting that we're going to have that move down. And because of our market today, the Dow Jones being up, we see the correlation in the Dow that, from the Dow to the US dollar, the dollar fell, right? So that's a correlation that we're recognizing, that we see every once in a while. Those correlations will probably change. You may not get, you might get a positive correlation versus a negative correlation, but right now for sure we have a negative correlation. That's pretty much what normally exists. So rate wise, as far as the US dollar CAD, we are now underneath our 720. We're going to find out if this is going to hold as a resistance point for us. We pretty much broke right through. We've got moving averages in order to the downside. Our 150, our 21, and our 8 are in order to the downside, but our 100 still has to jump over our 200 in order for us to create a full trend. And all of the moving averages are still above our 720. So we don't have an opportunity here just yet for a sell trade or a short trade. We don't really have it just yet. We want to see this kind of develop into more on the way down and commit to the move down. There's no problem with waiting for this because it's dollar based, and the forecast really for the dollar is over the next probably 2 to 3 years, we're probably going to see declines. So we're going to be shorting the dollar. US dollar Swiss, this one is actually going the opposite direction. We've still got trend to the upside. We talked about this last night. Look at our stochastic, was hanging out here almost near 100, definitely up there in the 90s. Right now it's sitting at 94.73. So, and we've just been cruising along there for a few days now along the top. So we've got this momentum to the upside. It's not huge. It's not, mind blowing here, the move, but it's just slowly and steady grinding to the north. We are waiting, just basically our opportunity to wait for our opportunity here is to wait for a pullback past our 50 here in blue or past our 100 here in yellow. And then, if you were a buyer there, a pure buyer of this particular strategy, you're going to take those trades on those levels as we pass them. Me, I'm not interested because I'm a seller of dollar. So I don't believe at this point. I'm learning. I think I was different in the past. I was more of the person who just kind of ignored that per se. I would ignore a situation like that. If the market is going that direction now, then I would trade in that direction. But I think as I kind of mature in my trading as well, I'm getting away from that. Now I've kind of made the conscious decision, okay, in my trading plan, I'm going to get away from that. I'm going to only really try to trade in the overall direction, because that's something I think that's been a detriment to my trading in the past, is just getting caught in positions because I was trading on the wrong side, not looking at the long term, not respecting the long term trend enough. And now it's like, okay, I need to really just kind of hunker down and respect the long term trend more than I have in the past. And so that's what I'm doing. So let's look at this, looking at this US dollar yen. This is a 1 hour chart. We can look at that, but we can also look at the 30-minute chart as well. So they're pretty much the same. We're trading underneath our 720 here. We did pop out above it just a little bit earlier today. But now we're below, or yesterday, I guess it's yesterday now, we've passed the day, the trading day. So on the 2nd anyway of November, we did pop up above the 720. So our opportunity would have been to place our trade here on the 50 or on the 100 or the 200, depending on how conservative we want to be or how aggressive we want it to be. So I did place my order based on this 50 here. So you can see where we have the sell order that's going across here. This dotted green line is my sell order. You can see that's where it was. At one point, we had traded above the 50, but the moving averages were below, all below the 720. So I didn't feel like we are going to continue up. I'm a seller of dollar. So I placed my order here on this 50. And we were able to take a short trade. Now it did go down here, it bounced, it went down, put us in the order, it bounced, but now it's actually come around. We've seen some resistance here from the 720. It did come back around, actually touched our entry point, and now it's kind of coming back around again. So we'll see how it turns out. Our stochastic has been moving up. It's not quite broken 80 yet, but it's been moving up. So I don't know, maybe we continue to move up just for a little bit. But overall, I'm comfortable with the position because I'm a dollar shorter. I'm a dollar short. New Zealand US, we are trading just above our 720, but not very far. All of the moving averages are below the 720. So right now I need this to develop a little bit more before I go and turn into a buyer, because our rate is above the 720. So I just, being a dollar buyer, then that means that, a dollar short means that I am probably going to be a New Zealand buyer here. So with time, I expect that our moving averages are going to go ahead and jump over the 720, but I'm not going to hurry up and place an order here to purchase. I need to see this develop, and then I'm going to take it according to the strategy. I'm going to see this develop into at least a full trend to the upside, and then any pullbacks to the 50 or the 100 above our 720, I'm interested. So this is developing. This is not something that's going to happen, right away. If our Dow continues to gain, which maybe, we'll see if we found a bottom here in the Dow. If the Dow continues to gain, then my expectation is that the New Zealand US will continue to gain as well. As far as the New Zealand yen, kind of the same situation. We're trading here below our 720, and all of the moving averages, however, are below the 720. So we're looking for, I'm going to be waiting for this to jump over the 720. Right now, looking at it, if it's going to go back into this downtrend that we had developed, then my order is going to be here on this 100 or this 50. I've placed sell orders there for my shorts. So I'd be shorting here at that level. We're far enough past those levels where it would probably have to commit to kind of falling before we would be entered into that. So even if we placed it here on this 200, right now we're a good ways away from that. We're 20 probably pips or more away from the 200. So I'd feel comfortable dropping my order here for a short. Matter of fact, what I'm going to do is I'll go trade, sell stop. So I right clicked, went to trading, and dropped my sell stop, right? That's the only option really there for selling. So I'll drop that right here. We'll just leave that order there. If we get placed into that order, then great. New Zealand Swiss, we are trading above our 720 on the Swissy. We have full mature trend to the upside because all of our moving averages are in order and they're all above our 720 and they're wide open. What I do see here is a nice big push. This push came away, it's coming away from the 50. Now I'm going to show you here, it happened already here, right? So we were kind of moseying along, but then we got these nice big candles that pushed us away from the 50. When I start to see that angle away from the 50, I know at some point this is going to end. It's going to find its end. So it did kind of scrambled a little bit here, but then it came back down and tested the 50. So we know that that happens. So anytime, this is a trade that we can play. We can play that pull away from the 50 for a trade back to the 50. It's just another way to play it. Now I'm getting that same thing again. We got a nice push away from the 50 here, nice big candle. Doesn't always happen in one candle, but we got a nice big candle here. And I expect that we're going to push back because it's angled so far away from the 50. I think that we're going to get some movement back. Eventually this move will exhaust itself. So that's just something that you can kind of see by eye when you're trading. So it's something that just a pattern that I notice. And so we can trade those patterns, kind of like this one. It's kind of the same thing, right? We're trading down here. This we got this nice move away from the 50. We got these candles here that kind of pushed. Even this last candle, it looked very strong, right? It's bigger than the previous candle, and it was a short. And you know what happened? The next candle, boom, we got this push all the way back towards the 50. We made it to the 21, and then the next subsequent couple candles really got up here and tested our 50. So when we start to get that angle away from the 50, we know that in probably the next 2 or 3 candles, that move is going to exhaust and it's going to head back towards the 50. It's just an opportunity to play it that way. Here, same thing. We had this move down. We got this push away from the 50. We got this push on this candle away from the 50, our opening candle of the day. And now we're pushing back towards the 50. So it's just another way you can look at these if you're kind of contrarian to the market or, trading, just looking for another opportunity outside of maybe the moving averages. That's something you can play. It's just a price action thing that we see. It's all over the place. Look at this one. This one, we're trading along here even underneath the 50, and then boom, we had these nice set of candles that this angle away from the 50 was very, very strong. And what did we do? Within that same candle, we pulled back and we went right back to the 50. So those are opportunities for us. We're going to get those, I don't even know what to call that. I don't have a name for it or anything like that. It's just something, just a pattern that I see. Maybe we'll come up with a name for it and call it something, and then we'll make that a strategy that we can play because it happens so much. You can see just on this one pair, it's happening like once a day. We pretty much probably are going to get that trade once a day on a lot of pairs. There's a lot of pips. You can get 20 pips out of it, 30 pips out of it. You don't need these 150 pip runs to make your money. So this is something that's an opportunity. But as far as right now, I'm going to be waiting for, these, since we're trading below the 720, I need to wait for my moving averages to really give me, come down below our 720 and give me some space. If they don't, then my only option really here is to buy here on my 100 or to buy here on my 200. The 50 is right on the 720, so I'm not really interested there. Looking at the pound US, the pound US is trading below our 720. It's right now passing our 100. So if I'm placing an order, I'm going to place an order here, a sell order here on my 50, because we're far enough away. We're getting far enough away from the 100 here. We're headed towards our 200. So I think the market would have to commit to going back into the trend. And if it does, there should be a head of steam when it does so. So I would drop my order here on the 50, and that would be my short for pound US. Pound yen. This one has been consolidating to the right here. You can see that it's just consolidating. All of the trading is happening in a very small range area here. We're popping out of it here and there, but most of the candles are happening within a small range. We see that we're pushing towards our 200 now. The only issue I see here is that our 50 and our 100 are pretty close together here, pretty close to the rate. So if I'm placing a trade here, because we're underneath our 720, I have a bias to the downside. I'd place my order here on the 50 as a sell. Okay. So that's the opportunity for the pound yen. It might break out and take off, right? Here is our pound Swiss. We've got a nice mature trend to the upside. You can see all of the moving averages are wide open here. We're getting this push. We're getting this push now a little bit. We've got a solid green candle kind of going right now, and it looks like we're trying to push and break past maybe this point of resistance that we found a couple of times here. So the more we push away, because there's not an opportunity, we don't have the pullback here right now. We don't have a pullback into our 50 or our 100. So now we notice, okay, what it's pushing heavily away, that angle starting to develop from the 50. So I'm going to let that trade maybe one candle, maybe two candles or so, and then see if it, this might be a short for us. If we're taking on a kind of contrarian view or an exhaustion view, basically we're saying, okay, well, this move might exhaust because it's just not going to go in one direction forever. You get those momentum plays or whatever, but when you start pushing away from the 50, you can find an area where, it seems like it's kind of starting to exhaust. You can short that. Here's a great example of that. We've got this push away from the 50. The angle on it is well away from our blue 50. And it came right back down and touched the 50, right? It came right back down and hit our 50. So that, could be our exit point, the next 50, right? The next time it hits the 50 can be an exit point because we know that typically when it hits that, that it might probably reject it like we did here. It may trade through, we don't know. So it's at least a point where we can break even or we can say, okay, that's my exit point. Just depend on what your trading strategy is. On the pound CAD, looking at this one, we're trading below our 720 here in pink, right? We're trading below the 720. All the other moving averages are in order to the downside, right? And so we're looking at short trades at this point in time on the pound CAD. The 100 is looking like it's eventually going to jump over our 720 here. Our 200 is lagging behind just a little bit, as it will, but we've got separation here. So if we get a real move to the downside, then we should get these moving averages to kind of jump below the 720. All we'd really be waiting is pullbacks at least past the 50 at this point. If pullbacks past the 100, we're going to be above the 720 right now. So I wouldn't be interested in a short trade there. Right now, my only option is really a push past the 50, which gives me room to place an order to the downside on the 50 here. As far as the pound Aussie, we're trading above our 720. You can see that it's kind of acted as a nice support for us so far. So we're going to see what happens here. Now, considering that we're above the 720, I would be placing my order either here on the 50 or here on the 200 or the 100 to buy. So if I'm going to be a little less conservative, I'll go here and place a buy stop, because we may go back into the overall trend, which is to the upside, right? So we may go back into that. If not, and the price doesn't commit or the rate doesn't commit to that, then maybe we fall below our 720. But right now the 720 looks like it's holding. And so, placing a trade, I would place a trade on this particular side. Now you can also place a trade. I put it here on the 50, but you can put it on the 200 or the 100 here, which are kind of clustered together, right? So that's the opportunity. As far as the Euro US, we're trading below our 720, right? Right now, the rate has surpassed our 50 here in blue. We got a little bit of a red candle going, but we're going to see if the trajectory pushes up closer to this 100 or past the 100. Right now, we would place our opportunity would be to place our order here on this 50. It's not a lot of distance, so depending on how much distance you want between the 50 and the current rate, you can wait for that. There's no problem waiting for that. Even if it doesn't occur the way you think that it should, or you don't get that distance and it falls down, don't beat yourself up because there's more trades. There's tons of these trades. So you don't have to beat yourself up about it. So this is a very simple strategy that helps you with your psychology as a new trader. It's gonna definitely help straighten that out for you because you never have to worry about whether or not there's going to be another trade. And I think traders tend to over trade, and I think I used to be one of them because you almost get the feeling like, okay, if this I'm not going to get this opportunity again in a long time, so I'm going to jump in this trade right now. I can't miss this trade because there's only so much time in the week. And so I don't want to be missing trades. And so a lot of traders kind of have that mentality, and it causes you maybe to overtrade or trade in places that you really shouldn't. This is great because this strategy gives you multiple trades every single day. You don't have to worry about it. Almost anytime you come to the charts, you're going to find probably some type of opportunity either setting up or that's already set up. So it's multiple times a day you can be in these trades. Looking at this Euro New Zealand, we see our 720 kind of moseying along here up on the top here. We're very far away from that as far as our other moving averages. So our penchant really is to the downside. So we'd be shorters of the Euro New Zealand. Now we did get a pushback to the 50, but this is what I'm talking about. Sometimes we get that pushback to the 50, doesn't go far enough ahead, and then it pushes down even further. That's perfectly fine. We just wait for the next opportunity. We didn't have enough space here for us to place the order on the 50, so that's perfectly fine. We're just going to wait for the setup to occur, right? But we did get this nice push away from the 50. We've got a nice angle away from the 50 because it's such a big candle. What do you think we're going to do? We're probably going to trade back to the 50. We got that nice separation here from the 50, right? Here's our 50 in blue. The candles were separating from the 50, giving a lot of space. And then boom, what do? We traded back to it. Here again, we traded back to the 50. So those are opportunities. If you're looking for a little opportunity to trade and pick and pop and get you a few trades here and there, it's all over the place. There's a million ways to do this. So I'm just giving you some simple things that you can look at. Our trading just needs to be simple. It doesn't need to be complex. Some people are into the whole intellectual thing and looking like intellectually strong. But for me, I'm like, you know what gets me to the pips the simplest way without me expending, a whole lot of brain cells to kind of get there. Anybody can almost do this. We can teach a child to do this. If they can see the pattern, they can trade it. That's what I'm looking for. Euro yen consolidation is what I see. We've got a real floor going across we're just trading off to the right. We've got a real floor support going on here right around this 121.77 area. We're just kind of sitting there. Maybe this is due, just been a couple of days. Maybe it's due to the market itself, just uncertainty in the market. The yen, Japan was on holiday as well yesterday too, so that might be playing a part as well too. So that might be why the yen pairs are flat. So there's nothing going on there for us just yet. Euro pound, we are trading well below our 720. We've got our movement now below our 8. Our rate is below the 8 moving average. So we've got to wait. We've got to wait for a pullback past this 50 or past this 100, and then we can short. All right, so that's what we'll be looking for. On the Euro Swiss, we are trading below our 720 here. We are basically between the 720 and the 200 here. So we can drop our orders to short on this 200. That would be the place where I'd be interested in shorting myself. So I'm going to go ahead and place an order there. I placed it just a little bit off of the 200. Doesn't really matter. It's close enough. But if you want to be exactly close, you can actually just slide the order down. Let's see. I'm going to grab it, just kind of slide it. If you have one-click trading enabled, you can slide it. So when you go to do something like this for the first time, there's going to be a box that pops up, and in the bottom left-hand corner, there's going to be a little box you check saying to enable one-click trading, and you can do it there. I think you can do it on your tools menu up here too. But you enable one-click trading, it allows you to do things like that. If you place a stop order or pending order on your trade, you can actually move it around. You can also move your stops and limits around that way too. You can just grab the limit right here on the chart and just slide it around. Your profit or your break-even stop, you want to move it, you can move it right from the chart. You don't have to worry about punching in numbers or finding out the exact number. You just slide it to where you want it to be. Okay, so the opportunity here is a short on maybe our 200, our 50, or our 100 here. EuroCAD, we are now trading below our 720. We've got a mature trend here to the downside. All we're waiting on is pullbacks past our 50 and past our maybe our 100. It's young, so the expectation right now would be maybe a pullback past the 50. So as this grows a little bit, then maybe we might get a deeper pullback. But typically when this is just starting out, we're going to get that pullback maybe to the 50, especially when there's that kind of separation going on. Euro Aussie, we are trading below our 720. The 100 now has dropped below the 720 as well, but the 200 still lagging just a little bit behind. So we're going to see if this continues to develop the way that it is. I don't have a buy trade here on my 100 or my 200 because rate is below the 720 and the moving averages are starting to fall below. So only thing I'm looking for here now is pushes to the 50 and to the 100 for short trades. Kind of slide over here. Let's take a look at this Swiss yen. Like I said, the Japan is on holiday, so we might have a little consolidation going on here just because their market's not open right now. So we are trading well below our 720 right now. Moving averages are pretty much in order to the downside, so it's a mature trend. We're just waiting for pullbacks past maybe our 50 and our 100 here. Here we got to pull back past the 100. So if we had placed our order on the 50, we'd be profitable. We pick off a few pips there. Right? Good. CAD yen going the opposite direction. We jumped over our 720. Our moving averages are jumping over the 720 slowly but surely. Our 100 is coming up here, headed towards it right now. So we're going to see what happens here. Our stochastic is hanging out here above the 100, above the 90s mark. Right now we're at what, 97.04 for our stochastic. So we have this idea that this is going to continue to the upside. We're just waiting to see these moving averages kind of jump over the 720 as well, so that we can have a full mature trend. We're going to be looking for any pullbacks towards the, past the 50 at this point. And then once the 100 jumps over, we'll be looking for pullbacks past the 100 so we can buy at those levels. This is a 15-minute chart too, so let's go to a 30-minute and see what it looks like. I tried to update the computer today or something, and so it was off. So some of these will come back with different time frames. They should be on a 30-minute chart. So on the CAD yen, we are hovering right below the 720 right now. We're just kind of hugging it at this point as far as the rate. All the moving averages are below the 720 right now. So the 200 and the 100 are kind of coming together. So the 100 should jump over at this point. But because we're underneath the 720, according to the strategy, what I would do is I would be interested in placing a short here, maybe on our 50, because that's far enough away from where the rate is now. If this goes back into this nice downtrend that we have, we should have some momentum because it's along with trend. It's below our 720. We should get the momentum. So we wanted to commit to this movement below. If it continues to go up, we can continue to move this stop up along with the 50 moving average. If we want to be conservative, we can place it down here on this 100 or 200 as well. So I can have my order here. I'll just slide it down there and show you how the slide works. You can slide our order in there, right? So it doesn't really matter. It just really depends on what your plan is, just, executing that way. It depends on what you feel comfortable placing your order at. If the rate jumps above the 720 and the moving averages start to jump above the 720, I can just delete this order. Just delete it and don't leave it on the charts. As far as the Aussie US, we are trading now above our 200, but we're below the 720. The rate's below the 720. All the moving averages are below the 720. So my short is going to be here on probably the 50 or the 100. They're both in the same place. So if I'm going to short, I'm going to go ahead and right click, trading, sell stop. That's my level, because if we continue this downtrend, the momentum is going to be to the downside, not to the upside. So this is how you remove that confusion from the market on direction. It's, some other people may be trading the move up. Doesn't mean that they're wrong. None of this is wrong or right in that way. It's just if we're analyzing it a certain way, that's the way we want to play it. So I think traders kind of think that there's a wrong way to play this and a right way to play it, and there's really not. It just depends. What's the strategy? What are you trying to achieve? And then once you put that in motion and you achieve it, then you've got something. You just stick to the way you do it. It's not any different than a recipe, right? So if you have a recipe for that you're following, um, you're gonna, if you're not familiar with it, you're gonna follow it. You're gonna follow the recipe to the letter and do the things that you're told to do, and the outcome should be right. Now, I'm going to preface that and saying it doesn't mean that it's always going to be right. The outcome is not always going to be right. I've been trying to make homemade donuts forever, and I made some again last night, and they're horrible. They're still horrible. So I've been doing this for like 3 months, and I've been following the recipe, but the recipe don't work. So no, so obviously I'm doing something that's not quite right. Doesn't mean that it's always going to turn out. But with trading, it's kind of the same thing. You're just following the recipe. You follow the recipe, you should get the cake at the end, right? Or the dish that you're preparing at the end. That's what you should get. That's all trading is. Now, how many recipes are there for the same thing? There's a million different recipes for the same thing. In general, they're all trying to get to the same endpoint. When you get to the endpoint, you get varying degrees of how good it might taste or how well seasoned it is. Just depends on what's in the ingredients and just how it's set up. That's all we're really trying to do here with trading. So it doesn't mean, so we have to get out of the idea of wrong and right. We got to get into the idea, okay, there's variety. You see it this way, I see it that way. We're probably both going to be profitable if we do it right. And every once in a while, we won't be. But most of the time, we are going to be because we're following the recipe. So as far as the Aussie New Zealand, what do we have going on here? So let's take a look. We've got our 720 way up here, right? So we're below the 720. The moving averages now are all below the 720 as well. We're actually pushing up past the 100 now, which is out of order with the 50. All of this is kind of out of order. My only opportunity then is going to really be a short on this 100. But we're not that far above the 100. The value of the 100 is 106.24. The rate's only at 106.25. So it's only like 1 pip. I want to see this move up further. And it's probably going to have to get past my 200, maybe up here right around where this, 106.35 area or so, maybe eclipsing this candle before I would short on this 100 or this 200. I like to have about 10 pips between the rate and my moving average before I want to place that order, because you have the spread. If the spread is 2 or 3, then it's really not 10 pips. It's really only 8 or 7. So you're still very, very close to the market. So that at that point, it's really not even committing to the move. It's just the fluctuation the market can put you in. But we're just hoping that, okay, it's not so far away that we lose the opportunity. So that's what we're looking for here. So this is something that may set up, but we just want to see the rate be maybe up here above 106.34 before I would short on the 100 or the 200 or the 50. As far as the Aussie yen rate is up here, it's trading below our 720, but it's moved up above our 200. So the opportunities I have will be the short on the 200, the 50, or the 100 here. Those will be opportunities. Maybe I'm going to be kind of moderate, so I'll trade right in the middle. I'll place my short trade there. If we get the momentum to the downside, then we get taken with it, and then we've got a lot of room down here to the support level. So it's down in the 73.20s area. So our order right now would be placed at, I kind of placed this order at 73.747. So 73.74, we'll call it. So we have a lot of room down here to about 73.24 at least, right? So here's 73.24. That's kind of where our support has been. If we trade back to support, that's about 50 pips, right? So that's not bad. That's great. There's a lot of people who trade all the time and never ever get 50 pips, but it's the opportunity, it's the potential that's there, right? We have Aussie CAD. We're trading below our 720. We've got a full mature trend here because all the moving averages are in order to the downside, right? So this means that we're in trend to the downside. Look at our stochastic down here hanging around 0, well below our 20. So our expectation that this should continue. And so we're going to wait for pullbacks to past our 50 or past our 100 before we drop orders on those levels to short, to sell. Here we kind of got it. We got to move to the 100. We could have shorted here on the 50. We would have had a nice trade, right? So consistently getting 10, 15, 20 pips is not really that difficult in the market. We've got a number of ways that we can do it, a number of recipes that we can utilize. It's just learning them one by one, learning how to do it. And it doesn't take you a long time. This particular strategy, I don't expect you to take a year to learn. I don't expect you to take a month. I think if you do this consistently for 1 month, you're going to be happy with your results. And you're going to know it if you've consistently done it every day for a month and you've done the analysis the same way. You follow the recipe every single day. You're going to know how to do it. You're going to know how to do it. And then you can say, okay, well, let me add something else. Let me add that snap back to the 50, right? I don't know what we're going to call it. I think I don't know what the name of that's going to be. So I just keep saying it snaps back to the 50 because it does. It just is like a rubber band. When you pull a rubber band, it kind of gets out of shape, but then it's always going to kind of pull back to its regular shape. So that's what we're looking at on this 50 moving average. So I think that that's another strategy that we can use. So once you learn this strategy with the moving averages and the trend, you can start to add in that as a contrarian to your trend trading. And maybe not even a contrarian to your trend trading. Maybe it's you still trade in the direction of trend. Maybe you still filter it with the direction of trend or whether or not we're underneath the 720. That's a core fundamental that we can have, a core fundamental piece of our technical trading that we can have. Where's my 720? That's the first question we're always asking, right? That's telling me, okay, I'm a buyer or I'm a seller. Very simple, right? And then we're going to just look for the recipe that fits what we're doing. So, and then we're going to follow the recipe and we should end up what we should, with what we look to get, what we look to gain. So I think it's very, very doable. I think as a trader, we talked about being at home, at working, spending your time at home. You can do this on a part-time level, but then eventually, when you have enough funding in your account, because we need serious funding in the account in order to be a full-time trader where it's going to take care of all your bills. Most people, okay, so let's kind of talk about this just for a few minutes. Most people don't have the funding to be a full-time trader. What they're doing is they're trading high lot sizes, much higher lot sizes than they really should trade in the account. And this is why accounts get obliterated. So for us as iLi Academy traders, I'm slowing that process down for us. I'm kind of breaking us out of that mentality. And I've had a few people that just, even with the auto trader, they don't get it. They don't understand that. But there's going to come a day when it's going to teach them. The market's going to teach you. So, it always, always, always happens to the tune of 70 to 90, between 70 and 90% of traders fail. And probably one of the number one reasons that they do fail, or one in the top 10 at least, or in the top 5, is that their lot sizing is wrong. They're trading far too heavy for what the account can support. So, and then they're trading multiple trades. So, they just don't have an understanding of how it works. So when we're trading here, I think 0.01 lot size for every $1,000 you have. So if you want to trade 0.05, you need to have $5,000 in your account. You want to trade 0.5, you need 50,000 in your account. So when I'm seeing people trading like 1.0 or 0.77 and they have like $1,000 account, this is way too heavy for the account. And you're going to be able to place maybe, and especially, and the problem comes not so much with like OANDAs. So that's why I push OANDA, because the leverage for the US based accounts or the US based brokers is capped at 50 to 1. So when you place a trade like that, you're probably only ever going to be able to place one trade anyway, because the margin is going to be so heavy, you can't place another trade. The problem comes in when you're trading with foreign brokers, which are giving you 500 to 1 leverage, 1,000 to 1 leverage. They're taking that, your ability, and saying, okay, where you would normally only be able to take 1 trade, we're going to give you the ability to do 10. And so now, because you can trade another pair and maybe one's not successful, traders go, okay, I'm going to take this trade, I'm going to take this trade, I'm going to take this trade, or I'm going to add multiple lots to this or multiple positions to this. And then the market goes against them, and it happens so fast. The gearing and leverage, it happens so fast that when you've got the market moving like the Dow moving like it was moving last week, we got big movement. So now in your Forex trades, there's probably going to be some big movement. And when you've got trades like that, it doesn't take very many pips for it to start to really hurt the account. So that's why I trade very, very low lot sizes. It's not because we're afraid. It's not because it's just because the funding in the account has to support the lot sizing. If it doesn't, you're looking for trouble. You're going to find times where it's going to happen to you so fast. You might be cruising along, you're doing well. There's people that they're making $1,000 here, $1,000, I'm making $1,000, and it happens, and they get excited about it, and they think that's normal, and then one day they lose 1,000. It's like, oh, like, and then just the gearing on it is just too strong. So, you kind of have to learn that. But I'm trying to get you guys away from having to learn that lesson. Learn it the right way and just do it the right way first. Don't overplay it. So that's kind of the lesson that goes along with our trades and our text tonight. So I'm glad that you're able to come to the Trading the Tech show. I hope that you are able to continue to attend that show, and also our daily market overview show where we talk about the fundamentals and what's happening. Tomorrow should be exciting. Tomorrow is election day in the United States, a day that a lot of us have been waiting for some time here. Definitely eager to see what the results are, but also eager to see what the progress, what the future is for the country going forward. This is always an exciting time for Americans, regardless of what side of the coin we're on. So we're going to see what happens there. And then, we're going to utilize that to help us to make some pips in the market. So I hope that you got some great ideas here tonight for what you can do as far as your trading. I hope that you're picking up on the strategy and it's making sense for you. And I hope that I'm explaining it in a simplistic way. If you have questions about any of it, definitely feel free to contact me. I will always answer your questions regarding the market and to the best of my ability, and give you ideas, because I want the recipe that you're making to be great for you. Okay. So once again, my name is Derek. This has been the Trading to Tech show. We will see you tomorrow night, same time. Have a good one. Bye-bye.